going on, Will? Welcome in, welcome in. What a bloody day that is. A few minutes, some more traders just trickle in here. We'll get started. Oh, we actually had Baba Unusual puts before close. 108 puts. E. AMD. I'm sure that was the first one. I actually had that one in mind to really look at it, especially on a larger scale. So I'll take a look at it, Will. Um, I mean, I'm sure some people will probably trickle in here. I know the market's pretty much closing. Everyone's pretty much wrapping it up. But today was definitely not a good sign. After yesterday's price action, I definitely expected a rebound kind of day today. We did not get that rebound kind of day today. The fact that we had Apple and Tesla and Microsoft weren't doing so bad early on in the morning. So I was pretty much still in hope that we would see some kind of rebound. We maybe get some kind of action going a little bit red before end of day sell off. But they just held us down through pretty much through the entire day until obviously you see that power hour just slaughter that we got. So that was definitely a rough day. If you were pretty much a bear, then you literally just set, you had your spy puts already set, and you were just riding the wave on the downside. Uh, and see, that's the thing. I mean, P Salty, thing about pretty much holding puts is that you never know when necessarily the bottom is, especially when you get this kind of rollover. And the other part about that headline is that you always want to be careful when it's the end of the month, when it's also rebalancing time, when it's the end of the quarter. Those are things where you also want to be pretty much aware of because a lot of those days you end up getting some kind of volatile price action, and it doesn't always work in the direction that we got today. So you can also see this move in the opposite direction, but obviously it looks like a lot of those pretty much those fund managers, those large whales that were pretty much positioned for this entire rally that we started from the bottom here, obviously, you see, dating back towards March 14th. A lot of those buyers that were pretty much just holding a lot of those tech calls, they were just holding through this entire recovery we got since we bottomed on March 14th. Now that they're repositioning themselves, now it looks like we're starting to gauge away from tech if that's be the case, right? Obviously, we don't know what they're holding or what they're repositioning into, but you would assume at this point, granted the rally that we've already had off of tech here the past few weeks, is that you would expect that they're going to gauge away from tech and they're going to reposition out of this. Granted, you would anticipate profit taking to step in. And that kind of like is what it felt like the past 2 days here, is really profit taking. So tomorrow will really be more of a telling story. It'll be the first in the month, so we'll see how it starts off. Um, but hopefully tomorrow will be maybe a rebound kind of day for us. Uh, some names that pretty much were showing a little bit of strength early on. Again, we're pretty much looking at Apple, Microsoft, and Tesla. Amazon to a less degree, it was I think most of the point of the day it was only down about $21 to $24, which for a name like Amazon is not really as much because on a day like today where Nasdaq was down about at 60, 70 points, even earlier on, I would have anticipated that Amazon would be down about easily $50. So that was just something that was pretty much more obvious to me in the sense that it felt like more of a calm bleed than more of a panic bleed until we got into power hour, and that was basically just a wrap for us. So in terms of levels and what we want to watch here real quick on SPY going into tomorrow, so I just give you a quick maybe a quick heads up. Obviously we stopped right where we needed to in terms of this four cracking basically this 451 level, 451 low is basically what I had as our stopping point. Next level I'm watching here, if we do continue to bleed out tomorrow, will be this 449 half. That's basically going to be my next level. And then I do have a little bit of a zone right here between 446 half to flat 446. So that's the next one. I think if we do start to really bleed out tomorrow, then you're likely going to pretty much just cut through 449 like butter. And we can pretty much target towards 446 to 446 half to the downside pressure tomorrow if this really does continue to escalate going into tomorrow, and granted the fact that it's going to be the first in the month as well, that's going to be a setting tone for the month. So that's pretty much what I would watch in terms of downside. Otherwise, if we get any kind of rebound, maybe we get pretty much 3/4 of the way of recovering this candle, then we're looking at a rebound towards 455, in which is just going to be a very chill put us in a box kind of day in which we rebound, but we basically go kind of sideways for most of the day. So 455, I want to say about 455.80 will be that spot roughly in which I would see us kind of rebound. That would give us about close enough to about a 3 or 4 point rebound from where SPY closed right now. So I wouldn't mind that at all if we really wanted to get that rebound. And then we see what we do tomorrow in terms of where the relative strength is in that rebound tomorrow. All right. But other than that, the other thing that just stood out to me was in terms of Tesla. Obviously, everyone was pretty much watching that wedge. You want to call it a bullfight, depending what time frame you were watching. That really stood out. But the fact that we ended up trying to wick 10-11, we weren't able to hold that 10-11 spot. And then we ended up rejecting, came back down towards 1096, and we lost support there. And we were never able to reclaim that 1096. That was pretty much a red flag to me. And so I did stay sideline on Tesla. I didn't necessarily go into the puts because on the back of my mind, I kind of expected it to trade within a range today, go until tomorrow, in which maybe they're setting up for a bigger move. And also the wedge was still pretty much playing out to be completed by going into tomorrow's open. So that was pretty much why I didn't touch Tesla too much. The wedge action just completing going into tomorrow just felt more so like a range day, but that was a beautiful sell off. The algo that Avery pretty much triggered with the Tesla bear, that literally just hit that 15-point downside was just right on the money. So hopefully you guys caught that. I know some of you got earlier on about 15 to 20%, and be honest with you, I would be content with that, right? I think that's usually what we try to shoot for every day, 15, 20% kind of gains. We're not necessarily holding for exact amounts in terms of these algos triggering. Whether it be a $3 straddle that's going $15 straddle, you're looking for those 15 to 20% kind of gains. Um, Cyber, that's also the other thing that was on my mind as well, was the fact about the stock split. If you probably heard earlier on in the morning, I believe Avery mentioned that someone hit 1,500 calls on Tesla for about, I believe it was about a month out roughly, if I recall what he said. And so I was assuming that was leading up towards more talks and rumors about the stock split. But then on top of that, Tesla also do have the delivery numbers coming out on Saturday. And then the other factor is they have an event also coming up next week as well. So quite a bit of the catalyst that's pretty much surrounding Tesla, and obviously that's why we saw on a day like today we would easily saw Tesla down 20, $30 right off the rip, probably intraday, and we would have saw it just plummet about down $50 by the end of the day. But because it has so many things going on, the delivery numbers, the events, the rumors of the stock split, that's why we see it's pretty much holding up. All right. Someone did mention to look at AMD though, so I did want to take a look at that. Obviously, that was one I was trading earlier on this week. I think I was pretty much watching that. When, if I remember, I had a trade idea in Discord. They're pretty much trying to grab calls under 117. As I try to remember exactly what my play was, it was pretty much picking up calls under 117 as we literally just skyrocketed day after day, and we hit a high of 125.67. But if you would have asked me, I did not see this kind of slaughter coming in. Once we lost that 120 mark, as you see, we pretty much just the flush. That's literally all I can say it was. But I did want to look at pretty much the weekly. So let's pretty much stretch it out. Let's see really where our potential support is in terms of this right now, and where we're really looking for in terms of demand zone right now. Let's get our rectangle. Let's see where particular our demand zone is right now. So right off the rip, in which a level that really stands out to me is right around this 99 to $100 mark. That's really the level in which that stands out to me more so. Obviously, you pretty much see that because of the fact that we've tested that back in October to September of last year, and then we also found bottom there on March 7th. So that was pretty much the particular bottom. If I was to say that we're gonna end up trying to find a bottom at a particular spot right now, and that would be more of a definitive bottom, it would ideally be that 99 to $100 mark. That would be the ideal spot. Now, if I was literally looking in terms of playing the short-term bounce, and this is pretty much what I touch bases with Dapper when I realized it broke that 110 mark today, is I was actually looking in terms of, I think it was about the 1 hour. Probably look at the 1 hour. The spot I was pretty much looking at in terms of this was basically trying to retest this 113 mark. That 113 level, in which that was pretty much prior consolidation, prior support level. That was a level I was watching in terms of if we get any kind of rebound, we get any kind of bounce. This is the level in which I would particularly look to reshort this. Is right around that 113 to 113 half. As you see, it was prior support for quite a while, dating back towards March 18th all the way up towards March 24th. And that's the level I would expect to retest as resistance. And then that would be the spot that you want to go short on it. So 113 to 113 half. And if you're particularly looking to reshort that, then you play it down towards that 99 to 100 mark. And that'll be ideally how I would play this. Now, I would not tell you to try and go long here above that 113 half mark. I'm just playing that more so, as you would say, quote unquote, a dead cat. You're looking to get the rebound here. That would probably be about a 0.236 retracement off of this from the high to the bottom here that we put in today. And that will pretty much give you that little dead cat, quote unquote, there. All right. So that's how I would look about playing about this. Is that 113 half, you play it up to that resistance, and then you look to short it right there, and you take it right back down towards 100. That would be my ideal scenario right now. Obviously, now the bigger question is if you actually lose that $100 mark, that $99 mark to be more specific, now it gets a lot more tricky because now we're pretty much dating back towards before July of last year, in which we're gonna see this get pretty much annihilated, not just slaughtered. It's gonna get annihilated. So in terms of that, if I'm looking for price action off of that, I'm going off the level in which we pretty much tried to break out of before, and that will be right around the spot in which we will see a breakdown towards 87 to 85 range. And as you see prior from August of 2020, that actually acted as your resistance level for quite a while. That dated up and towards November. So from August to November, that was ideally your resistance right there at that 88.7 mark. And then again, that ended up acting as after you had this little distribution here, you ended up breaking down and retesting off of that 87 mark yet again before you made your last breakout here to the all-time high. So that's ideally what I'm looking for is that 85 to $87 mark, and that's what I would say is your target if you break below 99. All right. So that's hopefully gives you a better idea. I know that someone just asked me about that, Will. Hopefully, if you stay tuned for that, hopefully you got your answer off of what I was looking for. But if I were to say it's not looking too pretty right now. So if you are in a position with AMD, look to pretty much exit once you get towards that 113 or 113 half mark if you do have a current position, because then you do not want to get caught once it ends up hitting that resistance and pretty much taking a U-turn. All right. One quick second. Okay, my bad. All right, so that was pretty much AMD. Hopefully, again, that gave you a better idea. In terms of that, the other name I know everyone's pretty much going to continue to watch is Tesla. Just giving you levels here off of Tesla as I continue to watch it. The only thing I don't like about this right now off of today's price action is obviously you see the little wedge action, little bullpen we had in which we gapped up after March 25th. What I don't like is this rounding top action. This I do not like at all. So for that reason, I will likely stay clear of Tesla. Again, granted the fact that you have all the catalysts that are pretty much behind it, the delivery numbers, the event, and the rumors of stock split, I'm choosing to pretty much stay sideline rather than try to short this. But obviously, you see pretty much where your risk is in terms of this curling top. You're going to test gap fill here at some point, then it pretty much indicates that 1054.58 mark. And then you see the risk of this entire gap fill coming all the way down towards this low of 1011. So that's not going to be pretty at all. I think if I'm just personally going to stay clear of that. Obviously, if I were to lean in one direction or the other, I would say you pretty much go short. But I would not pretty much look to go short here until you pretty much lose this gap. You test the gap when you lose it at that 1055 mark. I would stay clear of it because now it just becomes a little bit of a chop zone. All right. The other name was pretty much watching also Apple. Obviously, you see Apple's pretty much topped out here. The only thing that was a little bit of a head scratcher for me with Apple, I was pretty much I expected us to likely get towards that 3 trillion mark for Apple yet again. If you recall, once we hit that high, that was at 182.94. Apple hit a $3 trillion company, and so I was expecting that to pretty much get continuation up towards that high, but that was not the case right now. We could still make the pretty much your bull case that this is still a healthy pullback in that sense. But I would ideally want to see this hold this 173 mark. If we flush under 173, though, that's not going to be pretty. So it was showing a little bit of resilience earlier on in the day. Um, Obviously, that end of day flush literally called it for the selling pressure to really just fuel it to the downside. But if we can defend this 173, then we still can make a bigger push here towards that all-time high there, that 182 and some change, in which we are here. Apple be a $3 trillion company yet again. But 173 needs to hold. That would be the spot where I will say I will likely nibble at this in terms of call buying. But it would need to hold that 173. So that's more so like my defined risk right now. The line in the sand. It's either I'm gonna nibble at 173, we break it, I'm out, or I pretty much just I'm gonna stay silent. And if we literally just see it flush below 173, all right. So that was gonna be on the radar. But other than that, those are pretty much the names that really stood out. Facebook, that was just a rollover. That was a complete breakdown right now off of Facebook. Let's see if I could take a look in terms of where Facebook's really going here. Obviously, you see you had this little median peak right here that you had back from February 28th. I'm pretty much looking at seeing if we're able to hold that level that had a little bit of confluence in terms of that breakdown and the breakout off of the bottom. So I'm gonna look to see if we can hold right around this 211 range. I think that's the level in which you're coming back down to. I know that was a range in which we were pretty much teetering back and forth. So 211, 212, that's the spot you want to see in terms of Facebook. And again, I'm giving you levels in which if we see continued selling pressure off of this. So those are key levels I just basically want to see hold right now. All right. What is your overall projection for the month? Because it's all sounding bearish right now. Granted the fact again, my position in terms of this month, usually this is more so a little bit of a neutral to bullish month that we're going into right now. But I expect to see quite a bit of chop. Some names that have really been leading in this rally, quote unquote, basically Apple, Tesla, the Facebooks, the Microsoft, they've all been rallying so much. I expect them to find a median in which we're going to see more of a pullback earlier on in this month, and then we'll get a rebound towards the middle to end of the month. So I think this is a lot of what I would say is profit taking here as we start this month. We're going to see a lot of profit taking from when we bottomed here in the middle of March to this run that we've had toward the end of March. We have to give back somewhat of this entire price action before we get continuation to the upside even be the case. So these first 2 weeks, first half of the month, I expect a lot of profit taking in these tech names, and then we'll see if we're able to hold those key marquee levels, those support levels, and then we get continuation into the end of the month, rebounding. But otherwise, if we can't hold those major levels that I'm going through, it's not going to end up being pretty for the entire month, or rather, if you want to say that for that case. All right. Sydney. Oh, but again, I pretty much profit taking is what I would expect. If you pretty much just look at Apple, again, Apple actually had what 11 green days in a row. You expected at some point that Apple would basically give back profits, right? So we would expect to retrace, whether it be a 0.236 retracement of this or a 50% retracement off of this move. You would expect some pretty much some give back off of this before you even make a further push north, or you end up losing that key support level and you break down even further going into this new month. So that's basically my bottom line right now. So if I were to say I would proceed with this new month here going into tomorrow, proceed with a little bit of caution in the sense that you're going to expect some more profit taking along the lines of which we retrace off of this price action we've had the past 2 weeks. All right. Before we get to some key levels and we see if they hold or not. Bottom line. All right. I know that class is going to be starting here. So that pretty much hopefully wraps it up. We'll be on live tomorrow. I know the guys are pretty much, I don't know what today's class is. So I'll pop in, see what today's class is all about. We'll see what's exactly going to be included. Which plan includes Tesla algos? Tony, you would actually need to be a standard member in order to get the algos. So if you are standard, you pretty much get access to all of our bot commands, our live trading, and also all the algos and alerts that we have available. All right. Again, though, I know class is going to be starting. Sig and Dapper are pretty much probably just waiting on the sideline for me to wrap up here, guys. So let's tune into class. Let's see what Sig and Dapper have to teach us today. And we'll see what tomorrow brings for us. Obviously, 2 red days. You would anticipate that we have a rebound day tomorrow, but that's not guaranteed. So again, first of the month, just keep it easy tomorrow. Be light. Don't go crazy with the 0 days, especially on the first of the month tomorrow. I think that's probably my biggest headline, biggest advice for tomorrow. Just keep it easy with the 0 days on the first of the month. Let's see exactly how we're positioned to start the month off. And it will be pretty much wise to also see what the monthly candle is going to look like, that opening monthly candle as well. So that's something, those of you that maybe don't look at monthly charts, keep an eye on what the monthly candle is going to be starting out as. And that'll probably be a more of a telling story as the month starts, all right? But I'll wrap it up there, guys. Let's tune into Sig and Dapper. And I'm out. Later, guys.